Hey guys, welcome back to the channel. My name is Evan and this is Sense or Sense. And today I want to bring you a little bit of a different video than I normally would bring you. I've been bringing you lots of videos relating to different topics. One thing I haven't brought you yet is some information about one of the things that I do and I have been doing for many years, going back well over 20 years, and that is my trading. And this is one of my trading accounts. It pushed up to close to $50,000 recently. You can see that it's up about $25,000 since I started this particular account back in it looks like March of 2022. So it's been just about 3 years since I started, and I wanted to talk a little bit today about some of the things that I learned in my hedge fund days and my investment days, being an investment advisor. The two C's. The one is being consistent, and the other one is compounding. Those are the two big things that I feel as a trader and a long-term investor that are really important. And that's witnessed in this trading account. It's witnessed in a lot of my other accounts, but I kind of wanted to share a little bit with you about this particular account. As you can see, I have lots of different big winners over the last 3 years: Meta, Amazon, QQQs, Palantir, the iShares Russell 2000 ETF, ProShares Ultra S&P 500, Walmart, Apple, Seagate, Alphabet, Fubo TV, SoFi. I mean, these are all different industries and all different stocks. I don't have a particular stock that I look for, specifically. What I'm doing is I'm looking for consistency on product that they're selling, and consistency on earnings, and consistency on the company being long-lasting company that is going to be around for a long period of time. Now, obviously, there's one or two thrown in there like Fubo that is kind of a gamble, but as you can see there, that was a $500 winner on maybe a few $100 investment, whereas a lot of these bigger ones were multiple thousands of dollars in winners. And as far as consistency goes, also another thing that I preach and I've talked about in a long time for a long time when it comes to trading is consistency when it comes to your profitability. You need to cut your losers and let your winners run, and that's witnessed by you can look here. These are all the trades that I've done and all the different positions I've had over the last 3 years. You can see all of them are still red. Now we're starting to get red. All these above, are green, meaning I made money. These are the ones that I lost money. But you can see here, okay, yeah, I've lost $8, $10, $12, $14, $39. Then you keep going. Look, that's literally the end. I can't scroll any longer. My biggest loser in this entire account is one of the actual positions I have open right now, which is AMD, and I bought it some right before they had earnings, and they went down like 20% in a matter of a week. So I've been adding more shares. Again, consistency also means that you have to be consistent in adding more shares as the stock. If you believe in a stock and you think it's going to go up in the long term, consistently add to those shares. So again, one of the big things is consistency, both in earnings, the type of company, the business that they're in, the way that you handle yourself when you trade is also equally as important. And ultimately, all of these consistencies are incredibly important when you're trading and investing in the long term. And you're going to have losers. There's no doubt about that. You're going to have some companies that pull the rug out from underneath you. That's always going to happen. But as you can see up here in the top right here today is a terrible day. The market's down tremendously. You can see my account's down $960 something right now, 1.94%. What I wanted to tell you is you've got to be consistent even when markets are down. I've been in here trimming a few positions over the last couple days. I haven't made any trades today, but you can see here that I've got $48,000 and I only have $4,400 in cash right now. I've been trimming some positions ahead of this big sell-off because I kind of saw it coming, but the consistency goes through for long periods of time in all different ways, forms, and fashions. That's one of the things I learned, is that as long as you're consistent throughout your portfolio and the way that you trade, cutting losers, letting winners run, these sometimes sound basic, but to consistently follow that and be consistent with it in the long term is very difficult to do. One of the things I was known for in my hedge fund is being one of the guys that always seemed to make a little bit of money each day, even in bad days. Some days I'd lose a little bit of money, but most of the time I made money almost every single day. I didn't make the most amount by any means, but I hardly ever lost any money. And that was important for me in the long term to be confident in my abilities to invest and trade. The other aspect that I wanted to talk to you guys about today is the compounding aspect. So as you can see, just over a 3-year period of time, this account started at roughly $23,000 and now it's compounded to $48,000. Obviously, this is a very good return over 3 years. I don't expect this to happen regularly, nor is this a large chunk of my overall portfolio. This is just one of my few trading accounts that I have. But you can see how the compounding effect starts to take hold after just a couple of years of making really good money. And of course, that happens on bad days. You can see I would have never had a negative $900 day on this account when it was $23,000, because that would have been a 4% down day. That just didn't really happen. So you do get occasional down days. That's part of the reason why I'm filming this today, is that this is one of the terrible down days that we've had, worst down days we've had in quite some time. And I wanted you to see that you can remain calm. You can ultimately see that the account has been pretty consistently right where it's at for the last couple months. While the markets are digesting the new president and new things that are going on, I fully expect this to be very, very up and down, very, very volatile. But the compounding aspect of it is, if I continue to leave this money in good positions for long periods of time, I expect this money to start going up even more rapidly. So you can see that, from March of 2022 all the way to the beginning of 2023, the account only made, a couple $1,000s. But from the beginning of 2023 to the beginning of 2024, it made like $10,000 more. So now it's making a huge percentage leap. Then from the beginning of 2024 to the beginning of 2025, another big leap, another $10,000+. And then it's been pretty sideways so far this year with the new administration and whatnot. But this kind of goes hand in hand with that consistency. The compounding effect of money over long periods of time is what makes you wealth. Let me say that again. Compounding effect of your money is what makes you wealth. In other words, you get wealthy off of your money compounding over long periods of time. You have to be consistent in order to have that compounding. If you're not consistent, you're not going to ever have the money compound for you. So these all go hand in hand together. And what I wanted to do is I wanted to show you kind of how my account is structured. I want to go here and I'll show you all of the positions I have real quickly. I'm not going to go into any of them today, but you can see pretty much every single one is down except for Apple today. So I've got Apple, I've got T-Jewel, I've got US Steel, I've got Walmart, I've got AMD, I've got Meta, I've got Fubo, Amazon. This is a play on the SPYs. This is a uranium stock, Uranium Energy, QQQ, the Energy Select Spider, NVIDIA, UPRO, which is just an ultra high end, just a double leveraged, basically S&P 500. IWM, the iShares Russell 2000, CCJ, which is another uranium play, STX, Seagate, hard drive maker, Palantir, we got Target, we've got Dell, we've got Alphabet, we've got Occidental Petroleum, we've got a couple of yield max accounts that I'm just kind of experimenting with. There's only a few $100s in each one, and then we've got a covered call position. So you can see I'm spread around all over the place, lots of different positions. Literally every single one of them are down, is down today except for Apple. Like I said, down $950. I felt that it was important to show you guys, the other side of trading. You're going to have a big down day occasionally as well. And I'm curious to see what you guys think about this. I would like to get into the details of some of the reasons why I bought these individual stocks, if you have some interest in that. And I know my channel is about a lot of different things, but I felt like after introducing myself as an ex-hedge fund trader, a registered investment advisor over the years, I felt like it was important to share some of my own specific portfolio with you. This is one of my day-to-day trading portfolios. I might do 2 or 3 transactions on average a day, something like that. It's not going to be anything significant each day. It's not like I'm going in and trading 20 times in a day. So I thought this might be interesting. Just remember the 2 C's, compounding and consistency. They go hand in hand. They're both incredibly important for the long term. Thank you for tuning in. Hit the like button. Subscribe to the channel. I'll come back with some more additional information. And thank you guys for tuning in. Talk to you next time.